I think currently the market's key focus is mainly on the economic cycle. So look at the market movement is more driven by the bond yields and the economic recovery momentum. So overnight, we have seen the better than expected US job data, and these have directly filtered through to the risk-on sentiment in the Hong Kong equity market. And apart from the economic cycle, I think the China new five-year plan also have an impact on the Hong Kong stock market, given that the next phase of market opening and structural reform, including the rapid issuance of mutual funds in China, have been driving southbound liquidity into the Hong Kong stock market. So these are actually more significant market driver that move the Hong Kong stock market.
So that was actually going to be my next question. You know, when it comes to the NPC and the various unveilings that we know about so far, Fan, how does an investor take stock of it all? And is it considering that the things that they're focusing on were things that they've been focusing on for some time, such as, you know, domestic and technological innovation and self-sustainability, not to mention focus on the climate as well? Is there anything that is new that's come out of the NPC that investors need to know about?
In fact, the market mainly focus on two key topics. One is the monetary policy, because ahead of the NPC session, investors get increasingly nervous about the risk of policy tightening, given the PBOC's recent withdrawal of liquidity. But the government work report submitted to the NPC reaffirmed that the government are still sticking with a relatively accommodative monetary and fiscal policy, because the recovery still remain uneven, and the government attach great focus on job creation. And even though the fiscal deficit targets have come down mildly to 3.2% of GDP this year, down from 3.6% from last year, but the overall fiscal deficit level is still staying at a pre-pandemic level. So this means that the policy bias is still very much pro-growth. And this is going to diffuse investor fears that China has been leading the global recovery and will be the first to tighten monetary policy. So we don't expect any interest rate hike for this year. And in fact, the government work report also confirms that the government will introduce selective policy easing, such as the tax cut for the SME. And there would be very focused support for the strategic sector, such as increased government spending in R&D and technological innovation. So these would be the bright spots that market would want to focus.